What in the world has been going on with bonds over the last couple of weeks, really the last few months? We've been following this, not as much really over the last month or two, but just the summertime. But now we're back and we're following this a little bit more. We loosely been following it, just haven't been talking about it as much here. But we talked about the global net liquidity really being pumped back in the system in the fall. And we're nearing almost 12 months now, which is pretty wild to think about. We were talking about last September and October, liquidity being pumped back in the system and rates really changing a lot. And this is the last year here. So you'll see, and we'll go to August 2022. So this is last year, and then we see here the 10-year, the yield really bumping up in October, and then it started to come down again. It really started to come back down into March, and really like bottom looked like in May. And so we had this pump back down on yields, and meaning the price of bonds going back up, the yields coming down, and so therein lies the movement of liquidity back in the system. And you can see back here, really into 2020, the really hollowing out of the yields and like the all-time high basically in bonds. If we move all the way out, I mean, look at this. We have this real range that we've got to be really cognizant of, because this is broken out, and I don't know if there's any stopping it, and it keeps pumping, it keeps bumping up to this, and this is something that we have to be very careful of as investors, and kind of seeing this trend and how this is playing. No matter how you really look at this, it's broken out of those channels up above here. So what happens? What happens? And the rates keep going up. This is a time to have as much fixed rate debt as you can, and playing that game. And we our monthly portfolio allocation letter. We talk about this. I have one variable rate loan. Everything else is fixed rate debt. But yeah, that variable rate is 7%, 7.25. Probably gonna go up to 7.5%. I did math all the way up to 10%, just to be ready, because I figured this might happen. This could happen where the rates are going up, and to make sure things kind of worked, and could we handle certain situations. But you have to be able to know and kind of prognosticate what's going to happen, and these are different things are going to play out. But we just had an article, which I lost it, actually. It was somewhere, but I don't know if it was Bank of America or it was one of the Fed heads or something like that, said be prepared for more rate hikes. It might have been the White House, actually. So someone at the highest level said be prepared for more rate hikes, which is pretty mind-blowing, pretty mind-boggling. And to the government's credit, they've shrouded all of the data, really. We don't know the true CPI, the true inflation. They say it's only 3% or 4 or 5% or 6%, but we know it's a lot more than that. They've been jerry rigging that for 40 years. So what is the real CPI? What are the real trends? What's actually happening? And when you can obfuscate the data and you can shroud everything in secrecy and let the public not really know what's going on, then you kind of do things for a long time and kind of mess with things. I mean, even the fifth 177,000 jobs added this past month is the lowest in the last 5 months. But again, we know here, because we've been following this for a long time, since really last fall, like really hammering on this, Blackstone gating funds, FDIC. We've talked about a lot of these stories. We've seen, we talked about and reported on all of the different job losses, hundreds and hundreds of thousands of job losses, all through the market, through all the sectors. But then they'd come back and say, wow, we added a couple 100,000 jobs this month, 200,000. Bald-faced lie, a complete lie. So again, CPI is a lie. The jobs reports coming out of the government are lies, because again, those count a lot of people taking second jobs or third jobs, and it's complete fabrication of what's actually going on. So we have to be watching rates. Rates going up again is going to crush things. Anything over this 4% mark, again, in yield and on the 10-year Treasury, the bellwether for the economy and what's happening is not good. It's red flag territory. This is why Sri Lanka collapsed, UK pound last year. Watch for more chaos coming in the next 6 months, 9 months of things collapsing, things breaking because of these rates, these extended prices. It feels very weird, very, very weird at this point to me, just intuition, the gut intuition, right? Our intuition is one of the most important things we can use and have, and it just feels very undue almost. What are they trying to do? Like, what are we trying to break here? Are we trying to break the will of the people, the spirit of the people? At this point, I don't know. I don't know what Jay Powell is doing, a Republican, Joe Biden, a Democrat. I don't know what they're doing. It's really anyone's guess at this point. The central banks, though, at the end of the day, If you listen to Gregory Mannarino, if you read Decreed from Jekyll Island, if you listen to a lot of people, right, the Robert Kiyosaki's, the George Gammons, the Gerald Celentes, and really everyone, every Bitcoiner I know, the central bank is the root of all evil. And that's after reading that 12 years ago, that book, and many of the books like that, reading the Communist Manifesto, central banking being one of the tenets, you really get a clear picture that, yes, central banking is really one of the biggest things, the tenets of control that the unproductive class want. They want the control of the money. I care not who makes the nation laws. I care only who has the control of the money. Because if I control the money, I control the world, and that's it. That's it. So that's the game we're playing. That's why people in the gold and silver world. That's why Bitcoiners are out to end the Fed. They're out to take back control of the money, private issuance of money, back in the hands of the people, not in the hands of government. Money existed long before governments, and it's going to exist long after governments are here. So why do we have government controlling it in the present? I don't understand that. The founding fathers did not agree with that either. Money issuance should be in the hands of the people. Money only comes into existence with value creation and exchange between two people, and it being a container for value between two people. Government has nothing to do with it. Literally zero to do with money. And we have all been fooled into this ruse, into the Fabian socialist, communist lie that they need central control, command and control economies. They need to control everything. They need to be able to redistribute it around and basically take control of all the population. And population control, really, at the which they've talked about forever, right? We've talked about all the books. They want population control. They think there's only a certain amount of people that should be here on this earth, and that's it, guys. Like, there's nothing else to say at this point. We talk about the same things, in large part, the same things every single day. We wanted to come in and talk about the 10-year Treasury. Watch this like a hawk, because they're going back up. Watch this, but this is a clown world we're living in. Absolute clown world. It doesn't have to be, but the people at the top have control of the money. So as long as the people at the top have control of the money, the overlords, the couple people, remember, there's way more of us than there are of them. As long as they have control of the money, we will continue to get blasted in the face with propaganda, gaslit, things stolen from us, wealth, freedoms, liberty stolen from us, day in and day out. We'll still continue to have culture wars, bio wars, misinformation wars, all these things. They'll pit us against each other through the media and through their political campaigns, etc., etc. This is going to continue to happen. Mark my words, it will continue to happen. So we have to take money issuance back. We have this spike up in the fall, like I said, and then it went down for 6-7 months. And we thought, hey, maybe it's kind of reversing course. Nope, it's spiking back up again the last few months. So get prepared. I think when there's a big event, though, at the end of the day, the Fed is going to have to come back in. They're going to come back in, and that might be it. I don't know. We've been saying this for 10, 12, 14 years now. But at that point, how many things can they break? And they're going to have to come in, turn the spigots back on, and start printing like crazy, drop rates probably back down into this area, and really start getting the liquidity out there we saw it with COVID, right? We saw the PPP, we saw the EIDL, we saw all of the unemployment, everything, saying we're going to get rid of student loans, all this stuff. My prediction, again, is that they're going to pay for people's foreclosures, and they're going to try to get you to use their CBDC. I think that's what they're waiting for at the end of the day. I think they're trying to get the CBDCs ready. And that's why they're continually really, trying to gather things together here. And then they come out and say, hey, you know what? We'll pay for your house. It's worth $200. We'll pay $250. That extra $50,000, you can have it if you download our government surveillance app, our CBDC app, and we take control of your life. Are you willing to sell your soul for a couple worthless pieces of paper, a couple liabilities that you think are an asset? I'm not. So let me know what you think. Please share this out. The algorithm hates truth. We have to watch it, the 10-year, though. We have to. Bitcoin, about 26,000 currently. Let's see here. Just checking out some of the big three, and and oil jumped over the last couple months here as well. So again, watch this. Watch what's happening in these areas. Gold and silver still kind of holding steady. Again, Bitcoin, all of them holding steady. Everything just kind of flat. And this is when people get confused. This is when people start to do crazy things. So stay patient, stay diligent. Me too. Same with me. Start to be patient. Keep being patient, Brandon. Keep being patient. This will pay off, because it can't last forever. They're going to break things, and then all the shenanigans break loose. And that's when people who are patient and diligent get to scoop up a lot of assets on the cheap. Buy low, sell high. Appreciate you. Share this out. The algorithm hates truth. Trust but verify. Question everything with boldness. Thank you for coming to my TED Talk. And this is not financial advice, it's freedom advice. We look forward to seeing you on the next one.